someone needed to go around and educate people and say, here's how you tokenize assets. Here's how you can have your own customized blockchain environments and plug into global liquidity that's Ethereum. And to understand what this whole layer 2 ecosystem looks like. People have to understand that ETH is actually a really interesting store of value asset that should be in a portfolio alongside Bitcoin. And that all this weaves together and the whole financial system can be upgraded if we adopt Ethereum technology.
Welcome to High Stakes, the podcast where Web3 meets the real world. I'm your host, Alex Nwaka, co-founder and CEO at Validation Cloud, and former principal at Touchdown Ventures, where I led enterprise SaaS investments. Each week, we sit down with the founders, investors, and institutional leaders pushing the boundaries of blockchain, AI, and infrastructure. If you're navigating regulation, building at scale, or trying to separate noise from signal in emerging tech, you're in the right place. Let's get into it. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I am joined by Vivek Raman, who is the CEO of Etherealize. Welcome, Vivek.
Thanks for having me, Alex. Excited to be here.
Absolutely. So Vivek, maybe you can give the audience a little bit on your background leading up to becoming the co-founder and CEO of Etherealize, and maybe honing in a bit on your Wall Street background, which is quite extensive.
Absolutely. And the thing I like to preface is to say I'm not a crypto native or an Ethereum native person. I approach the space from a Wall Street and traditional finance background. And with that, I have ultimate conviction that blockchains are the future infrastructure that Wall Street and the rest of the world will use. So yeah, really excited to bring that perspective. I started my career in 2009, actually, right after the great financial crisis at Morgan Stanley, then hopped to UBS, then hopped to Deutsche Bank, then hopped to Nomura over the course of 11 years. I traded some pretty esoteric, archaic products in the credit space, specifically high yield bonds, and then distressed bonds, and then loans, and then credit default swaps, and then a lot of different equity option instruments that went along with that. It was an incredible ride. I love Wall Street. I love the people there. It was the most motivating place to be. The culture, the work ethic, all incredible. One of the best networks of people out there, which is why I went there in the first place. But what I saw over those 11 years was, despite the trillions of dollars of capital that moves through Wall Street daily, the technology backing Wall Street, trading and settlement and operations was so archaic. It hadn't really been upgraded since the 80s and 90s. But I'd started to get a little bit disillusioned with the idea that this was never really going to change. The biggest change that happened in the high yield bond market is that bonds, instead of settling 3 days after trade, they moved from T+3 to T+2. So they settled 2 days after trade. And that seemed pretty incremental in my view. So after 11 years, I said, you know what? I don't want to do this for another 10 years. I want to go into more of a technological type role. I want to have some convexity to the upside and be in something a little bit more exciting. So I pressed the eject button from Wall Street, which is pretty hard to do because, again, it's an amazing lifestyle. It's an amazing group of people. But left New York, left Wall Street, moved to Austin. And exactly when I landed in Austin, I serendipitously met some people that were working on this thing called Ethereum. And the whole time I was on Wall Street, I followed the Kool-Aid that they drank. I thought the blockchains were not a real solution. There were no real problems to solve. I didn't really believe in Bitcoin and ETH while I was there. I wish I did, because life would be very different. But no, I learned about Ethereum from a blank slate when I finally left. And then it immediately clicked with me because I saw that this Ethereum thing could actually be the technology platform that Wall Street could integrate in a very complementary way and actually use it for its trading and settlement and operations. And the way to digitize the financial system is actually to use what the Ethereum blockchain allows. And that was my light bulb moment. I played around with the ecosystem. I used Uniswap for the first time and saw what trading could look like in an automated sense. I started to learn a little bit of Solidity and saw that you could program your own assets and create your own tokenized assets. Then I was hooked. So for the next 4 years, I worked on institutional adoption. I went around to all the banks, all the buy-side firms, everyone that I had a network with from Wall Street, and said, hey, this Ethereum thing is really cool. Should we start to use it? Can we start to move assets like high yield bonds onto Ethereum? And for 3 of the years, I kind of got laughed out of the room because and the Wall Street attitude was not very open. Also, we were in a very oppressive regulatory regime. Also, the technology wasn't quite ready. And then we saw things like 2022 where the industry crashed out. So worked on that for 3 years. Then finally in 2024, everything started to change, where I went from being that crazy Ethereum guy to people actually saying, why is Larry Fink saying the world's going to be tokenized? And why did the Ether ETFs get approved despite the regulatory oppression going on to crypto? And then obviously that started accelerating towards the election when suddenly it went from blockchains being taboo to everyone scrambling to figure out how to integrate a blockchain strategy. And when I saw all that happening, thankfully over the past 4 years, I had built a pretty decent relationship with people in the Ethereum ecosystem. Got to know the Ethereum Foundation. And when I saw that blockchains were finally going to have their institutional moment, Ethereum didn't have as much of an institutional presence, whereas other L1s did. And so I saw an opportunity. So went to the EF, went to Vitalik, got a little bit of grant funding from them to set up an institutional arm for the Ethereum ecosystem. And that was the birth of Etherealize almost exactly a year ago. And it's been a ridiculous ride since, and it's grown a lot. But yeah, the whole idea was to bring institutions and their assets into the Ethereum ecosystem and to integrate these two worlds.
Fabulous. And again, maybe talking a bit more about how Etherealize fits into Ethereum's role in global finance as you see it. So how do you see sort of Etherealize, what role is it playing in that? And I think maybe as a secondary layer to this that would be great to understand, I think maybe even driving it, like, why do we need Etherealize? Like, why does it need to exist in your opinion?
So I wanted to bring blockchains as solutions to real problems. People have said for almost a decade that blockchains initially had been a solution in search of a problem. And so when the world was finally ready for institutional adoption of public blockchains, when, again, Larry Fink started saying the whole world's going to be tokenized and people raced to start to implement blockchain strategies, there was no very accessible touch point for the Ethereum ecosystem specifically, and to bring institutional assets onto Ethereum. And that's a feature, not a bug. The reason is Ethereum's a decentralized network. Ethereum's like the internet. Ethereum doesn't have centralized business development. Ethereum doesn't have centralized policy. It doesn't have a political a race in politics at all. It's a global neutral infrastructure technology. That's why it's so powerful. But there weren't that many advocates for it, specifically on Wall Street. In my view, Ethereum is the answer to how we can upgrade Wall Street infrastructure in a responsible, secure way. So that was the need to exist. Someone needed to go around and educate people and say, here's how you tokenize assets. Here's how you can have your own customized blockchain environments and plug into global liquidity that's Ethereum. And to understand what this whole layer 2 ecosystem looks like. People have to understand that ETH is actually a really interesting store of value asset that should be in a portfolio alongside Bitcoin. And that all this weaves together and the whole financial system can be upgraded if we adopt Ethereum technology. No one was doing that. So, the cool part about open source technology and global infrastructure is anyone can step in and say, we'll go educate. And I got that opportunity, and I'm very thankful for it. Since then, the first 6 to 8 months was a lot of education, and education will always be a part of the story because blockchains are unbelievable infrastructure, but people need to learn about what they can do, why they're ready, why they're safe, why Ethereum as a public network is the most secure, most global, most adopted network. People need to constantly be educated, so that will always be a pillar. But about 6 to 8 months in, it turned out that we actually had to help create the products and services to onboard institutions. And so we also started building out the technology part of Etherealize. And when we announced that, the best in the entire Ethereum ecosystem came in. Danny Ryan, who oversaw the merge of Ethereum from proof of work to proof of stake, came on as a co-founder. Zach Obron, who's I think arguably one of the best engineers in the entire world, or especially in the Ethereum ecosystem, he came on board. Some Ethereum OGs like Grant Hummer came on as a co-founder. So the talent started pouring in, which just showed me that there really was a market demand to learn about Ethereum. The real turning point was when some legends from Wall Street also started pouring in saying, hey, we want to be part of this. We want to help. Let's help merge these worlds together. And that's when we realized that there is actual product market fit for Ethereum. We just needed someone to step in and say, here's how assets can responsibly come out of public blockchains. And that's what Etherealize is doing.
Yeah. And when you talk about, sort of Wall Street infrastructure, I always think it's important to maybe even ground folks on like what that is and like how behind the times it still is. I can remember when I was at Morgan Stanley and at some point being exposed to how the firm manages risk, how it books trades, how it like handles a lot of the infrastructure around sales and trading and investment banking operations. And I literally have seen technology that looks like slightly more advanced maybe not even as advanced as like DOS prompting from like, your first experience with Windows. Can you talk to me a little bit about what you experienced on Wall Street from just like a infrastructure status quo perspective and sort of compare that to, how embedded that status quo sort of is today, and sort of like, moving forward to sort of another set of rails, or integrating Ethereum and digital assets and blockchain in a way that's forward looking.
Yeah, 100%. And I will say I have a lot of empathy, and I love the role that Wall Street plays. Like, the US has the best capital markets in the world. Wall Street's the envy of everyone's financial system. Like, the bar is very, very high. But part of that is because Wall Street and US capital markets have worked so well, there isn't really an impetus to change. So we do use outdated technology. A lot of the systems of banks are literally, they were built on COBOL and it was good enough. So people just kept it that way. People use, for moving trillions of dollars, they keep Excel spreadsheet entries on local computers of their positions and their risk. And that's just, it works. So people just kept it going that way. But what that results in is there's a lot of just mess. There's reconciliation requirements everywhere. Every bank has different systems. There's no standardization. Trades are still done on phones. Confirms are still sent via fax machines. Wire transfers are sent sort of whenever people want to send their wire transfers for trade proceeds. Like, there's so many breaks in the system because of human behavior, and it still works. It still works reasonably well. And the credit markets, the mortgage markets, the commodities markets, they're all, Wall Street's the backbone of the global economy. But there is an opportunity to say, okay, let's take a technology that's very positive sum, and then by plugging in more and more of these processes to public blockchains, you can actually upgrade the whole system. And it's a very positive sum. I think for a long time, Wall Street players, TradFi, thought that blockchains would cannibalize their activity. It actually doesn't. It actually allows for more capital formation, allows for more streamlined operations, allows for more trading, allows for more velocity. Once Wall Street starts to realize they can make more money using blockchains and cut more costs, that's pretty powerful. And that's where we are now in the blockchain adoption cycle. And that's why everyone's racing to adopt this, because it's now ready. But that's how the financial system was in the past. And it takes a lot of inertia to change it, but I think we have enough momentum to be able to make it done.
I agree 100% with you on positive sum. Is there maybe a risk perception or maybe a misframing of the opportunities that you see from Wall Street in terms of how they think about, Ethereum specifically, and blockchain technology more broadly? Do they have a misconception of what the risks are, or just a lack of true appreciation for what the opportunities are, or a little bit of both?
Yeah, I think part of it has been the marketing and the education. It was never Wall Street people championing blockchains. It was always people on the outside that were from the culture of let's move fast and break things. They were saying, hey, let's come and integrate blockchains in the financial system so we can tear down the financial system. And A, that's a terrible pitch, because who's going to ever accept that? And B, that's zero-sum thinking. So we needed more mature representations of what blockchain actually is, which is global infrastructure, which is a backend, which is like having an internet that everyone can plug into and then unlock a lot more commerce. And so because we had crypto people pitching blockchains to Wall Street, and then also seeing things like the 2022 collapse and a lot of just unregulated activity that left a smear on the space. Yeah, of course, traditional finance and Wall Street is going to be cautious, to put it lightly, or just antagonistic towards the technology. And so blockchains have to earn their place. And I think now blockchains have earned their place. Now you have people within the financial institutions championing tokenization. You have people trying to streamline operations. There's a mandate to enact some sort of blockchain strategy, just like there was a mandate a couple of years ago for all firms to enact an AI strategy. And so now blockchains are de-risked. They're codified in law. The stablecoin bill passed. Hopefully the Clarity Act will pass soon. There's enough policy tailwinds to say that this is the time that we can actually have real responsible adoption and not offshore unregulated adoption.
And when you think about the milestones, in your opinion, that are most relevant to watch as part of Ethereum's journey becoming, let's call it, inevitable institutional infrastructure, what are those milestones that you're looking for to signal, sort of the stepwise movement towards that end goal of maybe more ubiquity as it relates to institutional infrastructure?
So we need a few things to happen. First, technology is move fast and break things. The financial system cannot be move fast and break things by necessity. You can't have the US capital markets stop ever. So Wall Street cares about security and reliability and uptime. And so you need a track record. I mean, Bitcoin has only reached its pinnacle of being accepted as digital gold after 15 years. And the first 10 years, everyone was very, very skeptical. So Ethereum's at that exact moment where it has been online for 10 years without interruption. It has 100% uptime. It's universal, it's global, it's not controlled by anyone. It's a public good infrastructure. And it's proven its resiliency over a decade. It moved from a pretty energy intensive, wasteful proof of work mechanism to proof of stake, which is a lot more understandable by Wall Street, created a staking yield, which allows Ethereum to be financialized. That went on without a hitch. It's proven its track record. So it's earned its stripes as trustworthy infrastructure that Wall Street can deploy real assets on. So then what we need to see was the deployment of real assets. So first, we started getting regulatory clarity. The ETH ETFs got approved. Despite an oppressive regulatory regime, Ethereum became a commodity. That de-risked it more. BlackRock tokenized. Now it's almost $3 billion of money market funds, most of which is on Ethereum. So that just starts to set precedent. And then you saw all these other kinds of assets from stablecoins. Most of the stablecoins reside on Ethereum to tokenized private credit funds that Apollo's brought on to other kinds of tokenized money market funds to even tokenized stocks, all coming onto Ethereum. That starts to de-risk it even more. And now we're at this position where Ethereum has adopted, and you're seeing the layer 2 roadmap start to flourish, where institutions can build their own customized blockchains on top of Ethereum. And that's the unlock that I think is going to get us to universal ubiquity. Because at the end of the day, institutions operate in different jurisdictions. They have different customized needs. They need different privacy solutions. They need different security. They need to abide by different regulations. And the only way to do that is to have a customized blockchain that still can plug into the global public network. That's a layer 2 ecosystem. So now we're seeing, especially this year, we've seen so many layer 2s flourish, from Coinbase's Base to Robinhood saying they're going to tokenize stocks and bring them onto a layer 2 built on Ethereum, built on Arbitrum, to even it's global. Things like Ant Financial launched a layer 2 called Jove on Ethereum. So you're starting to see these customized blockchains starting to flourish. And so institutions can have their cake and they can eat it too. They can have their own customized environments. They can plug into the safest, most secure global network. So we've checked all the boxes we need. Now it's time to accelerate. And now it's time to bring the whole world on.
I think most folks would be, very familiar with the narrative behind Bitcoin of digital gold. And I think conceptually that's really powerful and simple enough for a wide swath of folks to really get, their minds wrapped around. You wrote a really great piece around Ethereum being digital oil that I thought was really helpful in framing sort of the Ethereum narrative in sort of context. And so maybe give the audience a bit more on how you see, Ethereum's narrative as digital oil, and maybe compare and contrast that to maybe Bitcoin's digital gold narrative, and, what makes it all sort of different.
Absolutely. Part of this whole journey has been educating institutions about ETH, because the Ethereum ecosystem is powered by its underlying reserve asset, and that's ETH. Bitcoin, after, again, 15 years, captured this very simple narrative of digital gold, but it's deceptively simple because you can't do much more with Bitcoin other than hold it. Ethereum's potential is unbounded. We're talking about the financial sector, but there are so many other use cases for Ethereum when you have this financial internet. You can start to bring on social media, you can start to bring on advertising, you can start to bring on gaming, you can start to bring on AI applications. Ethereum really is the world's computer. So how do we describe ETH as an asset in relation to something that can power the global economy? And that's why I call it digital oil, because where Bitcoin is an inert store of value, digital gold, Ethereum's a productive store of value. Ethereum it has a staking yield. It has an actual yield. It can be used productively throughout the entire Ethereum economy. It's used as collateral across all the different applications in Ethereum, as well as even today, JP Morgan announced that both Bitcoin and ETH would be acceptable collateral for the banking system to actually borrow against. So there's real adoption happening where you're seeing differentiation between Bitcoin as digital gold and Ethereum as this other thing that's very productive, has a yield. It's honestly, I would say it's one of the most perfect store of value assets. This closest analogy is oil. So we call it Ethereum digital oil, with some caveats that it's actually a much better store of value than oil, because oil doesn't have a yield, Ethereum does. Oil doesn't have capped inflation. Ethereum does. Ethereum can never grow at more than 1.5% inflation, and usually it's much less inflationary. And Ethereum's a pristine collateral asset. So I'm really excited for Ethereum to reprice and become the other store of value alongside Bitcoin. And we think digital oil is the best way to capture the utility and productivity of this unbelievable asset.
Let's move to what you've learned and what you've experienced in some of your conversations within sort of the institutional realm. You've obviously had countless conversations, as I might imagine, with institutional stakeholders and policymakers. And I'm curious, when you take a step back and you think about what are like the big things on the minds of these institutional stakeholders, what are the really big things they're either worried about or that are top of mind for them that either need to be demystified or that you're spending time educating them on?
It's a few things. So first, I'll caveat by saying everything is high level as it should be, because people need to understand blockchains. Like, people are now starting to understand AI. 2 years ago, no one would know what an LM is. Now that's a very, very common, it's just common lingo. Blockchains are in that transition period where they're going to become common lingo, where people understand blockchains power the financial economy and then eventually the broader digital economy. But with that, we're still at the tip of the iceberg. People want to use blockchain technology responsibly. And so the first foray is tokenization. It's really understanding what tokenization means and what it unlocks, because there's a right way and wrong way of doing tokenization. And there's a way that you can tokenize assets where it's actually more cumbersome to access them. And that's actually creating additional layers on top of the existing financial system. And that's how a lot of tokenization was done last cycle. I think now people are looking a lot more constructively, saying, how do we tokenize assets natively? How do we natively represent assets on blockchains so you can actually unlock utility and unlock access? And so that's a big area that everyone's focusing on. What's the right way to do tokenization? The second thing too is, how do we comply with different regulatory regimes and different regulatory jurisdictions and still use this whole blockchain ecosystem? That's why the layer 2 architecture keeps coming up, because it really is the only way for institutions to actually have their own fully customized ecosystem, but still enjoy the benefits of global blockchain distribution. So educating about layer 2s and helping institutions understand and even think about constructing their own layer 2s is another huge focus. And then the third thing is, blockchains have historically been, everything's been public. So you can see all money movement everywhere. And that's just a non-starter for any actual real adoption. So as we get to institutional world and even onboarding the masses in retail, just like we wouldn't show our bank accounts every time we do a transaction, people should not need to show their entire financial life story every time they do a transaction. So privacy. So we've been not only talking a lot about privacy, but at the end of the day, it's turning out that we need to invent a lot of the future primitives that people will use to actually have compliant privacy, to have customizable privacy. So we're doing that too. And yeah, to zoom out of all of it, we're past the education moment and we're now at the show me moment. So we've just stepped in, and Etherealize realized that we can teach everyone, but we also have to build a lot of the tools that are going to accelerate adoption. So we're doing that, focus on tokenization, layer 2s, and privacy.
Just for folks that may be less familiar with like some of the folks that you will rub elbows with to try to not only evangelize, Ethereum, but also really, bring some of this like kind of show me component that you just talked about. Who's typically like your champion or like the constituency that you're spending the most time with as it relates to maybe the financial institution category? Is it, as an example, a newly created head of digital assets as an example, or is it a bunch of different functions within the financial institution because of the integrated nature of sort of the back end of all of this?
It seems like a cop-out answer, but it's really all of the above. And the reason is because banks are so big and asset managers are so big. They are gigantic institutions. They're almost like governments in themselves. You have to appeal to a lot of different stakeholders. So the good part is, most banks, and soon all banks, will have digital assets teams and functions. So that's they all have mandates to see how they can integrate blockchain across all parts of the bank. So that's one line of entry. For asset managers, you have people that manage portfolios, and portfolio management is much easier to do when it's all represented on a blockchain and everything's digitized than manually through, we were talking about earlier, the multitudes of Excel spreadsheets that don't link together and old COBOL systems. So putting all that on a blockchain, it actually does make the portfolio management function a lot easier. So that's what a lot of asset managers like. Operations too. No one wants to overspend on operations. So blockchains end up being an operations layer and a huge upgrade that you can plug into. So that's another angle. And then trading desks, like you work in commodities, going to a commodity trading desk and saying that this is how we can settle trades digitally instead of physically using a tokenized representation, that resonates pretty well too. So it really is the full spectrum from digital assets to C-level to operations team to tradings team to back office teams. There's something in it for all of them. And that's why I think blockchain is such a positive sum technology, because it really does benefit everyone. There isn't really a loser, because people like to say jobs will be cut, but no, actually, it'll probably create more commerce because you can bring more assets into this digital world. More things can trade, more things can be structured. I think just like people think AI is going to cut jobs, but it'll actually just increase productivity and create more jobs. I think the exact same thing about blockchain. By an order of magnitude, the trading velocity and access is going to multiply, and the ability to structure products is going to multiply, and it's going to unlock new revenue lines. And that's the thing that's really landing with financial institutions. They realize they're going to make more money by integrating blockchains.
There's sort of the infrastructure behind the infrastructure, right? And I'm curious about, the infrastructure layer that supports Ethereum in terms of, validators and so forth that really make the blockchain go, and how important that is, not only to, the network itself, but then also when you think about the framing for some of the, institutional users that you spend time with, how much emphasis gets put on that, as it relates to sort of the core infrastructure constituencies for Ethereum. How do you think about that and their importance?
I think it's the most important thing. I think that it's table stakes to have a maximally decentralized network. And the reason is because Wall Street players are greedy in a good way. Right? Greed is good, right? So they don't want to use a platform that other people control. And so, I got an amazing opportunity earlier this year to testify in front of Congress about the Clarity Act. And one thing that we noted in our testimony was that Ethereum is the only ecosystem that is accessible to all, but it's owned by nobody. You can't point to a central point of failure. And because of that, you have the resilience and the uptime. Because there isn't anyone owning the chain, other L1s are very concentrated in a few data centers, or they have very few nodes, and it's pretty easy to capture those. Ethereum can't be. It's as broadly decentralized as a blockchain can be. So because of that, the counterparty risk on Ethereum for institutions and banks to use it is the lowest out of any ecosystem by far. And as we know, the financial system is based on minimizing counterparty risk. The whole reason the financial crisis happened is because of counterparty risk. So when you frame it that way, it's decentralization is table stakes, because decentralization means security. And it is a little ironic. The more centralized systems, retail users, the people don't really care about counterparty risk because they're just used to having a trusted third party. They've used those pragmatically, but the people that actually value decentralization but most are the Wall Street institutional players. So,
well, absolutely. I was on my first year of Wall Street when Lehman failed, and I just remember, there was an entire half week where we were frantically trying to figure out as a firm how much counterparty risk we had in aggregate, to Lehman. It was a topsy-turvy time, but I think a reflection of, counterparty risk and minimizing counterparty risk has been sort of a core thing that's been etched into the minds of a lot of folks who have been on Wall Street, really since then. And so I think it's a really great point. Vivek, I'm curious how you view the impact of stablecoins as it relates to either a catalyst for tokenization or just a catalyst for institutions to care more about Ethereum and blockchain overall. Obviously a huge story, like just in general in terms of that like class of assets growth, but then also the clarity that the Genius Act provided for it. So maybe for the audience, can you contextualize like what the growth of the stablecoin space means like more broadly?
I think it was the watershed moment. I think it's the tip of the iceberg for what the potential of the industry is. But the Stablecoin Act passing, the Genius Act passing, was the validation moment that unlocks innovation potential specifically for Ethereum. And that's because Ethereum is the platform that, honestly, because it's so global and decentralized, it didn't cut corners. Through the last 4 years of oppressive regulatory environment, people didn't deploy because they didn't have rules of the road. By having stablecoins etched in the law, institutions were now allowed to use Ethereum. Stablecoins are allowed to flourish in the US. Innovation could actually happen in the US. It was the beginning. I think that stablecoins are the canary in the coal mine for all of tokenization because all stablecoins are tokenized dollars. And so you're already seeing every single bank's trying to create their own stablecoin. Every single payment provider is trying to create their own stablecoin. Look at the innovation that's being unleashed just by stablecoins, the simplest form of tokenization being codified into law. Now project that into when there's a framework for all tokenized assets. I think Ethereum is going to absolutely fly in terms of adoption, in terms of price, in terms of seeing innovation happen. Because when you have tokenized dollars and then you have tokenized assets and they can transact, and then you have all these applications that can be built in finance, decentralized finance. I like to call it programmatic finance. I think that's a little bit more accurate. Innovation is just getting started. So I think it was Tom Lee calls the stablecoin build the chat GPT moment for crypto. I would agree with that. I think it absolutely is. But I think it's the chat GPT 1.0 moment. I think when we see chat GPT 2.0 and 3.0, that'll be when tokenization and the Clarity Act go into effect. And then we'll see like another golden bull run.
I'm curious if you have any takes on, what types of assets or markets will move into the tokenized realm next. Like, what do you think just like naturally makes sense from, whether that's your former markets and credit or whether it's real estate, whether it's private funds? I'm just curious like how you see, sort of what types of assets move into the world of tokenization, when and how.
I have to say the other cop-out answer, but it's really all of them in parallel. Like it's too positive sum and there's too many tailwinds behind the industry. It's almost like we have all this pent-up demand to tokenize things and put them on blockchains and no one was allowed to. But now the dam is breaking and now everything's coming on chain. So dollars were first, tokenized dollars are stable coins, but you're seeing banks do tokenized bank deposits, which I think are stablecoin plus. You're starting to see tokenized money market funds everywhere. Those are way more, arguably things should transact in tokenized money market funds rather than in stablecoins, because then you're embedding the yield into the asset. So that's coming on chain. Tokenized treasuries have come on chain. Tokenized stocks are making a huge push, and a lot of different ecosystems are working on that. And you're seeing even the NASDAQ saying they'll allow for settlement of tokenized stocks when the DTCC is ready to do that as well. So tokenized stocks are a really, really cool implementation. I come from credit land, so I obviously think that all the different credit assets from bonds to CDS to mortgages, et cetera, all of those should belong on chain too. Commodities too. We have a lot of players in our team that have deep roots in commodities, and I know you do as well. So you probably have more articulate thoughts than I do, but I think commodities belong on chain as well. So they're all going to come at once.
Vivek, in terms of if we fast forward to 2030 and like you're right that Ethereum becomes Wall Street's new backbone, what do you think are the starkest changes relative to the like current status quo and the current financial system and its paradigm that like just change completely?
It's actually ironic because I think when Ethereum does ultimately win, it's going to be quite invisible. So there won't really be a front-end change to most people. Just like we don't think about the hardware in our iPhone when we use an iPhone, but iPhones are universal. Just like we use the internet, but we don't think about how the internet actually, the plumbing of the internet functions. The financial system is not going to know it's operating on top of Ethereum. It just will. So I think Ethereum will be universal. All assets will be tokenized. They'll settle programmatically on public Ethereum L1 and on a variety of L2s. And the best user experience is when people don't know they're using the technology underneath it. That being said, what I do see happening is once you have Ethereum universally as the backbone of the financial system, but also the broader economy, I think ETH is going to be one of the most valuable assets on the planet. I think it's going to flip gold in a really, really big way. And you're going to have this store of value that's universal. It's held by banks, held by governments, held by the Federal Reserve, for example. Like that's where I see ETH's position as global infrastructure when it's finally won.
That's really articulate. One thing that we haven't talked about that you've written about in the bull case for Ethereum is what the Ethereum means as a coordination layer for AI agents and like what I would call agentic commerce more broadly, sort of described in a variety of different corners of the venture capital and innovation space. So maybe could you talk a little bit about what you meant by that and like what that actually means in practice when we think about agentic commerce and AI agents in general?
Yeah, absolutely. Right now, Etherealize is focused on the financial sector because it's the clearest product market fit for me personally. And I understand you come from Wall Street as well, but that's very limiting for Ethereum's actual scope. Ethereum is the world computer, and I think you'll have a lot of different applications across industries and sectors on it. The most exciting one, I think, is actually not finance. I think it's AI. And it's because what AI did was allow information to become commoditized to the degree that it's accessible everywhere. So anyone can access information, anyone can access knowledge. It's one of the coolest unlocks that I've ever seen. But the thing that AI can't do is transact. It can't actually interact with money. And so the only way to give AI agents autonomous money that they can actually use is public blockchains, because otherwise financial systems are closed systems where you need to have everyone register with a bank, open a bank account. AI agents cannot do that. I don't think JP Morgan is going to open up their bank account, their banking system to a bunch of AI agents, but public blockchains can. So will there be one day when AI agents not only will tell you the answers to something, but will go buy you the cheapest flight that's available for your next vacation, or refill your groceries before you know you need them, etc.? That absolutely will happen. And for that to happen, AI agents need access to a global distribution network where you can hold money. And that's what blockchains are. So I see AI doing commerce on behalf of consumers. It actually necessitates public blockchains. And when you go ask, you want to do customer surveys, I go ask every single AI platform from Grok to ChatGPT to Anthropic, to Claude, say, you're an AI agent, which is the most secure, open, reliable blockchain system that you would use to transact on behalf of users where you have to safeguard their money. And every single one universally comes up with Ethereum. And that's because of the values of decentralization, security, and uptime and resilience that it has. So I actually see blockchains as unleashing AI's potential to not only distribute information, but to also transact and do commerce. And the world where AI and public blockchains, specifically Ethereum, intersect is going to be a really cool one.
I'd be curious your take on which of the two technologies is behind the other, in terms of, do you feel like AI is leading blockchain technology as it relates to enabling agentic commerce? Or do you think that in some ways blockchain is like a more established technology than even AI is? Just curious how you view those on a relative basis.
It's interesting because there's two framings for this. I actually think blockchains have been battle tested, specifically Ethereum's been battle tested for much longer than a lot of the AI things that are being released. I mean, ChatGPT, LLMs, we're still in the experimentation phase, even though everyone uses them. Blockchains have been around for a while, and Ethereum's sort of proven its track record and resilience. But if you flip it, so I would say that blockchain technology is more ready to onboard the financial system than AI is. I think we have a lot of unknown unknowns in AI. That being said, if you look from a valuation perspective or a market penetration perspective, people think that AI is going to completely take over the world. If you look at the amount of CapEx spend, the amount of the valuations that AI companies raise at, whereas blockchain companies are still scratching the surface. I mean, there's still a bit of a valuation taint on blockchains that's now starting to correct a little bit as we've seen all these public market IPOs happen. But I almost think that blockchain is very undervalued. AI is very fairly valued, if not overvalued, given how much money is going into the space. But blockchains are ready. Blockchains are ready for global commerce, to onboard global commerce, and AI. We'll see. I think both technologies will make each other better and more resilient, and they're actually very, very complementary. And the biggest upside for Ethereum might not even be Wall Street. It might actually be AI integrations and AI doing trades and commerce on behalf of people.
Second to last question here, sort of a two-parter. You talk about how things have been priced and relative to how the market's pricing them. Obviously, Ethereum's lagged Bitcoin. And so the signal, that I take from that is, if you're correct, the market's sort of mispricing the opportunity for Ethereum, especially in sort of the near to long term like that, or sort of the near to medium term. Why do you think that is? And maybe one other little small tidbit, what do you think is the biggest risk idiosyncratically to Ethereum and sort of your view of where it goes?
The reason Ethereum's lagged is because Ethereum's potential was not allowed to be achieved because of the regulatory regime. So Ethereum is exactly where Bitcoin was 5 years ago, where Bitcoin, people said it was digital gold, but until it got accepted in the ETFs, until it got accepted institutionally, you didn't see that repricing until you had something like MicroStrategy come in and say, we are adopting this as a treasury asset. That's when it went from 10K to 100K. Ethereum, again, the Genius Act, the stablecoin bill was the ChatGPT moment. And that was only a few months ago. So Ethereum's potential is starting right now. And so that repricing, the same repricing that happened to Bitcoin 5 years ago, I think it's going to start for Ethereum in earnest right now. It's just before people were allowed to use Ethereum, before institutions were allowed to use Ethereum, before it was codified in the law, no one could see the real potential of it. Now that's all flipping. And again, we had Michael Saylor 5 years ago that came in and said that that Bitcoin's a treasure asset. They have Tom Lee coming in saying Ethereum's a treasure asset, and he has a pretty good track record. So he thinks also that we're going to see it, not only a flippening, but also just the universal backbone of Wall Street will be built on Ethereum. To your question about what the biggest risk is, it's regulatory. I mean, this is the technology's ready, institutions are ready. We're seeing a lot of adoption happen, but blockchains are supposed to be apolitical. Blockchains are supposed to be nonpartisan, and blockchains are supposed to be neutral infrastructure. The risk is that we innovate the wrong way, which we're doing our best to make sure it won't happen. It happened last cycle, but we innovate the wrong way, and there's a backlash, and the political pendulum swings back, and it becomes unfavorable or too risky for institutions to adopt blockchains, and that would be a setback. I think that again, Ethereum specifically is very apolitical and is global and is across jurisdictions, so it'll endure and it'll survive and it'll have its moment. But I'm hoping that moment happens right now when the stars align in terms of political momentum.
Got it. Vivek, we asked all of our guests for their high stakes hot take. So what's your boldest prediction for the next 12 to 18 months, either specific to Ethereum or just digital assets as they intersect with global finance?
So I think that people have always said that the universality of blockchains are 5-10 years away. I think we are now at such a rapid inflection point that we're going to see trillions of dollars come on chain in the next 1 to 2 years. And I think we're going to see Ethereum as the asset, the asset will flip Bitcoin in the next 1 to 2 years, because all of the potential will be pulled forward into the opportunity we have now. So I think the opportunity is it's quite asymmetric to the upside, and I'm excited to do our part.
Awesome. Well, let's park it there. Vivek Raman, CEO of Etherealize. Vivek, thank you for coming on. I really appreciate it and looking forward to having you back on soon.
Thanks so much for having me, Alex.
That's a wrap on High Stakes, the podcast where Web3 meets the real world. For more insight into how blockchain and AI are reshaping institutions, head to validationcloud.io and follow @validationcloud across all socials. Stay tuned for more conversations from the front lines of innovation. I'm Alex Nwaka. See you next time.